All right, let's talk about Hasbro. You probably know them for stuff like Monopoly, maybe Play-Doh, but their latest earnings report, it tells this wild story. It's like there are two totally different companies living under the same roof. And today, we're going to break down what that means, because it's a huge shift for them. So, you look at this headline number, and it looks pretty good, right? Revenue's up 8%. That's almost $1.4 billion. Solid. But trust me, that number is hiding the real story. It's a classic case of the devil being in the details, because what's going on underneath that 8% is just fascinating. And honestly, you don't even have to dig that deep to find out what's going on. The CEO himself, Chris Cox, basically told everyone. He said, look, the big win here, the record-breaking success, it's all coming from one place. And it's not the toys you're thinking of. It's all about Wizards of the Coast. Okay, so let's dive into the good news first. And when I say good, I mean spectacularly good. This is the part of the business that's acting like pure rocket fuel for the whole company.
Get ready for this number, 42%. That's how much the Wizards of the Coast in digital gaming segment grew. You know, this is the part of Hasbro that does Dungeons & Dragons and Magic the Gathering, and seeing a 42% jump in revenue, I mean, that's just an absolutely incredible, staggering number for a business this big.
But here's where it gets really interesting. So how do they get to that 42% growth? You'd think it's all digital games, right? I mean, we live on our screens. But nope. Look at this. The vast majority of full 35 points of that 42 came from tabletop games. We're talking physical, hold them in your hand, playing cards. People are buying more of them than ever. It's kind of wild. And this is the secret sauce right here. It's this brilliant strategy they call Universes Beyond. What they're doing is taking these massive, beloved franchises, think Marvel's Spider-Man, think Final Fantasy, and smashing them together with Magic the Gathering. And it's working like a charm. It pulls in tons of new players and gets the die-hard fans to open their wallets. It's a genius move.
And if you think that 42% was nuts, check this out. If we zoom in on just the Magic the Gathering brand, revenue was up an unbelievable 55%. 55%. This is a brand that already crossed $1 billion in sales a couple of years ago, and it's not just growing, it's accelerating.
So, okay, the gaming division is an absolute beast, a money-printing machine. But that's just one side of the story, right? What about the other Hasbro, the one we all grew up with? And this is where the music kind of screeches to a halt. Because while the gaming side is on this incredible rocket ride to the moon, the other part of the business, well, it's telling a very, very different story.
So the Consumer Products Group, basically, that's the classic toy division. All the stuff you think of when you hear Hasbro. Their revenue didn't go up. It went down by 7% in the very same quarter that gaming shot up 42%. It's a complete mirror image.
And we're not talking about some obscure brands here. Yeah, sure, Peppa Pig is doing okay, but look at the ones that are struggling. We're talking about absolute legends. Nerf, Transformers, Play-Doh, even the Star Wars toy line is seeing a decline. These are some of the biggest names in the toy box, and they're having a tough time. And this isn't just a one-quarter slump. The struggle in the toy division led to this huge $1 billion accounting move earlier in the year. It's called a goodwill impairment, which sounds complicated, but all it really means is the company had to officially admit, hey, our toy business just isn't worth as much as we thought it was. That's a big deal.
So you've got this incredible split, right? One division is absolutely crushing it with Wizards and Dragons, and the other is struggling with the classic toys. So how does this all work together? How do you even run these two things as one company?
This table right here, this tells you everything you need to know. Look, the toy division on the right still brings in more money overall, for now. But look at the next column, the operating margin. That's the key. That's profit. The gaming division is running at a 44% margin. That is just insanely profitable. It means for every dollar they bring in, they're making way, way more profit than the toy business, like over 4 times more.
And let's look at that in a different way. Check out where the actual profit is coming from. Think about it like this. For every dollar of profit that Hasbro makes, a full 76 cents of that dollar comes from gaming. The entire toy division, with all its famous brands and higher revenue, is only chipping in 24 cents. The gaming side is basically funding the entire operation.
So, when you see a split this dramatic, the path forward becomes pretty obvious, right? The writing is on the wall, and Hasbro knows exactly where its future is.
In fact, the gaming division is doing so well that it's given the whole company a huge shot of confidence. So much so, they've actually raised their sales forecast for the whole year. That's a big positive signal to Wall Street, and it's pretty much all because of how well Magic the Gathering is doing.
So here's the game plan, and it's pretty straightforward. Step 1, cut costs wherever they can. Step 2, double down on what's working. Pour gasoline on that Magic the Gathering fire. And step 3, keep the classic toy business stable. Let it generate cash, and use that money to pay down debt. It's a very clear focus.
And all of this brings us to one final, really big thought. The numbers are clear. Hasbro isn't really a toy company anymore. It's a gaming company, first and foremost, that just happens to have a toy division on the side. So the big question for their future isn't, what's the hot toy for Christmas? The question is, can this magic last? Can they keep this incredible gaming engine growing? Everything depends on it.